So I just showed you the ABC scenario, which is where we would say that this entire movement here, it's two parts of a three-wave large long-term correction. Now, what if we look at it the other way? It's very common. Most people believe that at 2000, that was the actual top in the market. Of course, like the Dow went up, that kind of thing, but still, like we look at the other indices, the S&P, no, not really. The NASDAQ, no, not at all. So if we go back to the Dow Jones, and it actually might be a little easier to do this on the S&P. So that was an expanded flat in the Dow Jones. In this one, what we would be looking at would be the entire movement, and this is the second ABC scenario that we said A down. No, take that back just a second. Okay, never mind, I got this. Okay, so the idea is this entire correction right here would just be called a flat. On the Dow Jones, it was an expanded flat, and we know that because that was higher than the actual top, quote unquote. But back on the S&P, if I take this, delete those drawings, the idea is it did A down, B up, and then C down to this level. But then they say this entire movement right here was a wave X, which just the letter X is intimidating itself. But the idea is that after a wave X, an entire other correction that would be the same size as the other part of the correction will occur. So this one gives us basically a 7-year bear market. At least in the other scenario, it would only give us one bear market, but this one's giving us two bear markets. So we'd have down and then back up, making no progress, not even to this point, and then back down again. Now, the thing that people talk about a lot, they're scared that it's going to be, since this was a relatively flat correction, they believe that the next correction after this wave X is going to be a sharp correction. So imagine if we had this correction right here, but it was a sharp correction and extended, and things happen very quickly. That would give us a price target on the Dow of, I have to rescale my chart. No, on the S&P it would give us a price target of, yeah, about 516.49. I love it. It says negative 44.80. I'm not even going to do that one. But if it extends on this chart, that would basically be saying that there's going to be, it's the end of the world essentially, a worldwide flight to safety, which would give a price target of Dow 1000. So that's the worst case scenario. What do I think is going to happen? There's going to be a bear market. Absolutely. I'm 100% sure of that. And it's going to take the price down to at least 10,000 on the Dow. But now it's not a good time to be buying. So hold on to your hats and let's see what happens.